Hello guys and welcome to my channel. If today is the first time coming across my channel, kindly don't forget to hit the subscribe button, put a notification bell so that anytime I post content like this, you'll be among the first to be notified. Now today's strategy is not based on indicators. We are going to be doing just simple technical analysis. And this is going to be done on the weekly time frame for any pair, be it currency, be it volatility, synthetic indices, any pair. So the requirement for you to get the strategy right are this. One, you need to understand market structure. You need to understand market structure. You need to understand liquidity. You need to understand what they call volume. And you also need to understand what is called valid order block. So if you are a new trader and you have not have deep understanding of these four concepts or five concepts, it will be very difficult for you to be profitable. It will be very difficult because you see the forex market you are seeing. There are so many things involved that if you just jump in without having this basic understanding and how to apply them on your real chart, it will be very difficult for you to succeed. So most of the time, many traders will tell you the market is being kind of they intentionally watch their own trade, and anytime they place trade, the system or those brokers intentionally place them on losses. But the question is, are you the only one trading there? I believe the answer is no. Yes, in the forex market there's manipulation. So that manipulation is what you should focus on how to bypass so that you won't be caught unaware. That being said, I'll just teach you this. I'll teach you how to, if you understand this concept, these four concepts or five concepts, okay, four concepts, then I'll teach you a simple way you can trade either the forex market or the synthetic indices. So now I'm going to take you to the chart and I'm going to show you procedures on how to do this. Don't forget, it's on the weekly time frame. So let's get to my chart. I will start with the volatility indices first. Or no, I know. We have more of the forex traders. Okay, I will start with the volatility indices first. You can do this on your mobile phone. It doesn't matter. Control Y. I want to separate the chart. Good. This is on the weekly time frame now. What we are going to do, or what you should do, is look for the previous high and previous low of the week. So this candle here, this last candle here, this very one was the last candle for the week. That means last week, that was last week candle, right? That is based on the weekly uh, time frame. So that was the last candle for last week. So what we are going to do, we are going to place our horizontal line on it. That is the high, and here is the low. So I have succeeded placing these two on the last week and not this current week. Then the next thing is you go to your daily time frame. We want to look for the last candle, that is the last previous daily candle. So the last previous daily candle is this candle. Let me show you before I mark the top and the bottom. This is yesterday's candle. So this current one is to this candle, right? So now I'm going to mark the top and the bottom. This strategy is very simple, but you just need to understand those four concepts I told you. So I'm going to change the horizontal line of the daily candle to, let's change it to white. So you click OK. Then let's also do the same thing for the bottom of the daily candle. That was yesterday candle, right? So that was the bottom for the yesterday candle. Now we go to 4-hour time frame. So we have successfully marked out the highs and the lows of last week and the highs and the lows of yesterday candle. So now that is we are going to now determine what to do. But before then, I told you need to understand four concepts. The first one is structure of the market. The question now comes to what is the market now? What is the structure of the market? If you are to determine the structure of the market, is the market bullish or is the market bearish? Now, for you to say a certain market is bullish, it means that the current price should be above the previous what high. That means the current peak should be above the previous peak. This is how you understand if you are on a bullish trend or a bearish trend. For a bullish trend, this is what usually happens. Price will give you um a high, make what we call pullback, right? When price give you pullback, the next thing price will do is price will break above that. So as it is now, this was our previous high here. This level was our previous high. Since price has broke above it, then we have a break of structure towards the upside. If you don't understand market structure, you can join my training class. My WhatsApp number is in the description below, where I teach. I even have materials or tools that help you to identify these areas, then also explain a detailed video that will guide you through, because you can't trade forex on your own. You need somebody to mentor you. So as it is now, this is a bullish market because the current price has taken out the what previous high. Now in a bearish market is vice versa. So what we'll see is price giving you what we call an impulse movement. The next thing, price will make a pullback to some certain length, and then price will break below the previous low. Here was our previous high, and here was our previous low. So price has taken out that previous low, indicating that we are what bearish. So this is how the structure. When you want to understand market structure, this is how it is. So let's go back to our chart and let's identify what is on currently. Are we bullish or bearish? We are looking at it. This was the highest point price got to before now. This place, and as it is, price has what taking out that high, meaning we are what bullish. We are what bullish. So there are two things involved. When price after price has taken out the previous high, there's what we call a form of what retracement or pullback. So this retracement can drop up to either a bullish order block or probably use a fair value gap. That means price will cover areas that are imbalanced before it proceed. So only this movement, this downward movement is what we refer to pullback. I'm talking about this current movement on the H4. You can see price is dropping. So price has to drop to some certain level before price will push back. So if you are a forex trader, as it is now, this is where you go to your lower time frame. You'll be looking for opportunity. Now I've been able to tell you the structure of the market. The next thing is the volume. In volume, you will notice that price failed to cover some areas, right? Price failed to cover some area. If we should check here and here, you notice that there is what a fair value gap. Price didn't what meet at the midpoint of this bullish candle that went up, right? So this price that is dropping now has higher tendency of coming to cover here, and once it covers this point, it can reverse from here if it is based on the fair value gap. Exactly. So price can come all the way down there to cover that distance. So in this area, this is where you leverage your trades on. That is why when you are doing your analysis, some of you are fond of going to the daily time frame. When you go to the daily time frame, you can't even highlight what is happening. You can see we started from the week because price has taken out the previous high of the week. We know there's high probability of price coming back. And let me also tell you, when you come to liquidity, it is very difficult for price to buy or sell if it has not cleared liquidity. But the fact that price has taken out the previous high of the day and the week, it means that price has taken out liquidity, because every high point in the market has are always seen as areas of liquidity. They are always seen as areas of liquidity. Now, talking about entry, you can't just enter this market based on the 4 hour time frame. You have to do breakdown to maybe your 30 minutes. You check the 1 hour time frame. What is happening in the 1 hour time frame? Before then, let's go back and highlight those areas that we're expecting price to cover in 4 hour. So let's use a horizontal line. We're expecting price to come to cover here. So I'm going to change that. Let's change the color. Let's change the color to green. So areas we're expecting price to do what? To come and cover. So there's a break of structure at this moment towards the upside. So we're expecting price to cover this volume here. We're expecting price to cover this volume before price will either start going up or price take another direction. So we're going to be leveraging on that sell opportunity we got from this particular pair now, which is the volatility 10 days. This can be done on any pair, doesn't matter if it is forex or synthetic. So let's go to the H1. When you come to the H1, the last candle that gave you the high of the market currently is this candle here. This is the candle that gave you the last high. So immediately price breaks below it now, we have a bearish order block, right? That means there's going to be an order block that is going to be created. So if we are to start taking our entry using the H1, that means if you are going to use your H1, then it means you'll still be waiting for price to visit. But do you know that before your H1 delivers, other people are taking sniper entry on probably maybe 30 minutes or 15 minutes? Let's go down again to 30 minutes and see. Because after you've done this analysis on your higher time frame, the next thing is to look for entry on your lower time frame. That is, where is the opportunity going to come from? Now, if we should look for the last candle that gave us the high of the market, this was the candle that gave us the last high of the market. This one here. Can you see it? And where will have been our bearish order block? This was the candle that led to the break of structure. You can see price tapped into it, right? Daily price tapped into it, price started dropping. So as you are waiting in your 1 hour time frame for price to give you a very shorter block, other people who are smarter than you are already in the trade. And where are they expecting to probably come out? You can see that it has not even gone to our area of interest. Now in this 30 minutes, we have another bullish order block here, which you can use as your exit if you don't want to use the H4. You can use this area as your exit. Why? Because there was a break of structure at that point. For you to understand this thing, you need to probably get somebody to teach you how to identify all these things, because when you don't understand all these concepts, it will be very, very difficult. Very difficult for you to trade the forex market. Now there's a bearish order block here, sorry, a bullish order block, which can make price pull back a bit. Yeah, but remember we did our analysis from the higher time frame. So if you're using the 30-minute time frame, maybe you might exit at this point if you're not too sure if price will go lower. Because if you check, price has been breaking structure before now. Price broke structure here. Can you see? Price also broke structure here after making some kind of little pullback. So that was how the structure kept breaking towards the upside. Can you see now? But this was the last candle that gave us, this very candle here was the last candle that gave us the high of the market. So since price has taken out that, it means character has changed from bullish to bearish. Exactly. For those of you who understand forex very well, all these things I'm telling you will be very easy for you to do. But if you don't understand it, then you need to join a simple class where you'll be able to get all this information, so that you don't just take trades anyhow. You don't just take trades anyhow. So that is on Big 10 for this week. So this is our analysis. So this week, based on the pullback price we're going to be making on the weekly time frame, we can leverage on that on our lower time frame. Is that clear? So to tell you that this doesn't happen only on synthetic indices, even on forex pair, you can also do the same thing. Now this is on gold. So let's do the same thing to gold. We are going to highlight the last candle for the week. This is the last candle for the last week. So we're going to the head, the top, and the bottom. That's what we're going to mark out. Then we're going to do similar analysis down to our lower time frame. So we are going to mark the bottom is marked. Let's mark the top now. Don't forget, we are not marking the current week. This is for last week. So I've highlighted the top and the bottom. Let's go to the daily candle. Where is the daily candle? Here is the daily candle. That is the candle for yesterday. So let's also do similar pattern for that. We're going to highlight the bottom. Let's change the color to red. Red. Okay. Then the top, so that we'll be able to identify the daily candle. So if highlight the weekly, let me change this green to red, white, so that it can align with the low of last week. All right, now let's get back to 4-hour time frame and see what price is doing. So talking about structure again, price is bullish on gold. Yes, price is what currently bullish because this was the last candle that gave us the last high, but currently now price has went above it, meaning there is what a break of structure towards the upside. So and price has gone above the weekly candle because this is the last candle for the week. Price has gone close above it and also close above it when it swipe liquidity from the daily candle. So what is the probability of this week now? It means there's tendency price is going to do some kind of pullback. Why? We have imbalance. The area price has to come back and fill. So on the norms, we have this little breakout here. This was a candle that led to the break of structure. So you can be hearing breakers block. We can call this a breaker block. But after then, if you don't want to take much risk, areas where price will come and fill, there's a volume here, and also let me change it to green. I'm expecting price to come and fill those zones, price to come and fill this space here because there's huge volume, and you can extend it even up to this point. You can see now that you can take your sell once you get the opportunity in that time frame. Then when price gets here, you do break even, then extend it to this point, this last point where the green line is. So since we've done that, let's go to the 30-minute and see if we got opportunity to sell all the way down. All right. Okay, you can see despite that this we have a break of structure here. We don't even need anyone to tell us. This was the first break of structure. Price has taken out this. So there was a break of structure. I believe there should be a bearish order block from here like this. Can you see now? So that was what price tapped into. Price started dropping. So your first TP now, your first TP, if we should zoom in, for proper uh, areas, your first TP, you go with what I explained to you on the H4 because as it is now, I think there's a bullish order block below this, but since we can't zoom in, just let's go to the H1 first. When you come to the H1, you will notice that there is a break of structure here. There was a break of structure here, right? So there's probability price drop down to this zone again, which is in our H4. That is area we are expecting price to drop to. So price can come all the way down here before it bounces back. Or if we should so zoom in, let me clean, then let's zoom in a bit. Don't worry if you are scared of how to identify those areas. There is materials for you that is going to do that for you easily as a beginner. Exactly. There are materials that is in place that is going to do that for you as a beginner. Okay. Exactly what we highlighted earlier is where we're expecting price to definitely come into. So we're expecting price to drop all the way down there based on the information we got in our 4 hours. Based on the information we got in our H4. So if you are new to trading, definitely you need informations like this to boost your trading career. But if you can't come down to all these levels where we're expecting the H4 to give us, you can use this H1 order block here. You get it now. So you can just highlight this area or exit because there's a mini volume between these points. Sorry, between here, there is a volume between here in your H1 and this place. Can you see it now? So you can use that as your exit point. Price has not fully tapped into that area yet. So you can use that area as your quick exit point. Then we also have another one here. There's still volume, though it's not much around this zone. You can see there's volume there. So there's volume. Price, you can either use this first one to opt out or probably use the second one. But like I said, if you are new, you shouldn't be scared. There are materials on ground that is going to plot those areas for you. Because when we start teaching you, we can teach you, I'm going to show you areas, how you can identify those areas in your charts without any form of difficulty. So this is how the weekly analysis is. You can do this for any pair, any pair, any pair. It doesn't matter if it is a forex pair or synthetic indices. Exactly, guys. So this is the simple strategy. You can use this on your mobile phone. You can do this on your mobile phone, and you can also do this using your PC. So you don't have to start using those mobile indicators, which are not that reliable. So this analysis is very simple, but the condition is you need to understand this concept fully. I've in the process I've teach you how you can understand your structure, because when price goes above the previous low point or previous high point, it indicates that there's a break of structure. Secondly, liquidity. How do we know that there's going to be liquidity? Your higher lows, your lower lows, your high of the day, your low of the day, equal lows, those are areas where liquidity usually lies. So for price to go above our previous week high, it indicates that there is a clear of liquidity and at the same time there is a break of structure. So we are going to be leveraging on that pullback. So what is going to bring about that pullback is the volume. So we also check for volume on our chart. We want to see areas price break from and it didn't cover. Then finally we can use our bearish order block or bullish order block as entry or exit. So like I said, I don't want this video to be too long. I have a tutorial class where I teach people how to trade the forex market with tools available, videos available, how you can understand this and apply it to your trading every single day. So if you have the knowledge of this, you can start applying this weekly method and you see that your trading will be more profitable compared to those scalping you normally do every single day. So that being said, thanks for watching. Don't forget, if you want mentorship, check the description in my below in my videos. My WhatsApp number is there. You will be hearing of the millionaire strategy. These are the things I'm teaching those people in the millionaire class and millionaire strategy class, and materials have also been provided for all of them. So you can start there, and then you see that your trading pattern is going to change drastically. Unlike before now, you are total stranger in the forex market. Some things you don't know, with the videos available and the tools available, you start to understand and be able to interpret what price is doing every single day on the chart. Yes guys, make sure you like this video, click the share button, and then if you have any comment, make sure you comment on use the comment section. And if you are yet to subscribe, kindly do hit the subscribe button, where I'll be posting more mobile strategy every single day.